Morning, guys. I want to show you guys something. Okay, this is the breadth chart. And as I have been pointing out, and I'm sure everybody in the room has noticed it, breadth has not been particularly helpful yesterday because the market is a momentum market. The market is a market where it's being driven higher by fewer names. Therefore, you don't get these heavy, robust breadth readings where you have strongly high percentage of advancing versus declining issues. What is really striking when I look at this is how this was early December when this was the last time we had anything resembling a minor retracement. Okay, it started end of November and it ended on December 3rd. And that was the last time we got anywhere close to a normal contraction in breadth, which itself at the time was very benign. This was negative 1300. Well, since then, yesterday, or not yesterday, I guess day before yesterday, the 21st, breadth closed at negative 536. That is nothing. So one sign that the market is becoming more two-sided is when we have something like this, or even like this. We haven't had that in a long time. It's way overdue. Now, that doesn't necessarily portend the end of the bull market. I really think that this market is going to go higher for months. But what I have been looking for a while is a more day-to-day rotational market. This was a pretty persistent trend right here, right? But nothing like we've seen really since the October low, where you have minor pockets of retracement and then just, the retracements will get super narrow. Then you have a short-term decline. Then you have this ramp higher. Then you have a little teeny bit of volatility. And I don't even count this Globex mini crash that was immediately retraced in about 2 hours and did not affect the cash market whatsoever. So it's basically we've been in another grind higher. So the pattern that we're in now, I really don't think is sustainable. And have been looking for more volatility up and down. And that's sort of how I'm trading. I've mentioned before, for better or for worse, I'm not position trading this market. I'm in cash in retirement accounts and things. The reward to risk right here is just not very good. And from an investment perspective, I'm willing to miss any upside that occurs. From a trading perspective, I am trading this market from the short side when I get setups and when we reach levels, upside targets. Now, for the first time in a long time, we actually have some previous trade activity to lean against as a potential target. And that would be yesterday's session high and just above it. As I said in the pre-market, if we get back to yesterday's session high, it's probable that immediate upside above that level is going to be limited because of the range to get to there from last night's close. That's not a perfect way of identifying upside targets, but when you factor in all these other things going on, I'm pretty comfortable only looking for short trades at this point in time. Now, at the point in time, I see some sort of contraction in breadth, and I'll take a look at where we are intraday. And then at that point, maybe, I'll cover shorts, I'll look for longs. But until we get some semblance of normalcy returning, I think this is just a case of musical chairs. And the market is very vulnerable to one of these 1, 2, 3 day out of the blue, 1, 2, 3% declines. I would love to see that. I think it will be, that first one could probably be a really good buying opportunity. So that's that's sort of what I'm thinking strategically in terms of the stock index futures at the moment. Guys, um, I scrunch this up. You can see we're sitting, the Globex low is important, but just below the Globex low is into this stuff over here, which is just above this. So, when you've had such a torrid uptrend as we have had, you're going to have downside levels, every five handles. We're, you know, just above one now, and actually we're the most immediately important level is this Globex low, and then this high at 33.21 quarter. Let's see here. And to the downside, right about here. It's Globex since let's see. Well, most of Globex has been in a really narrow range of about, let's see, 33.12 up to about 9 handle, 10 handle range. Guys, this is something that has been overdue for like forever. Um, this is a cash chart. I mean, day session chart of the ES, and you can see the last time we got this level in breadth was in December. So we're so overdue for some sort of downside in breadth. Now, this is really awesome because it's a minor signal that we could be transitioning into at least a two-sided market. Now, is this a top of super important magnitude? I sort of doubt it, which, since I doubt it, means it may be, but that's another story. We'll just follow the levels to the downside and let that be the determinant as opposed to my opinion. Always better served doing that, by the way. Pro tip. So we're negative 13.27 right now. We could be near an intraday low, guys. Now let's take a look at some levels here. Okay, here's where we are. You can see where we're trading into this level right here. Now it sort of magnifies this level. So we're into a level now. And you can also see, remember we talked about when you're reading the auction, and this is where the profile graph comes in really, really handy. We're in the process of forming a distribution. Now there's no way to know if this distribution is complete or not. But at some point during the day, you're going to get two-sided trade. Now, we may trade below 32.93 before that begins, but you will get two-sided trade. So you're in, we've reached the upper cusp of a potential downside key reference area. And when you factor that in with where Brett is, I would be cautiously looking for a low in this area today, guys. Hey guys, I want to show you this lean hog trade that we're in. And I've been talking about it. And I want to walk you through the thought process. Now, this trade may or may not work, but it's working. So that's that's a net positive at the moment. But hogs, and we got long over here, and then we got stopped out. We made a little bit of money, and then we came down and we formed this balance area. And then on what day was this? Whatever day this was, I don't have my, hold on, let's do it this way. Here we go. So on the 21st, a couple days ago, we broke to the downside, and then we started trading back up into this area. And so we bought. Now, I really sort of messed up because I didn't see it quick enough, because I was thinking this could turn into a false breakout trade. So, we didn't have a great entry. This is our net position of 3 here. It could have been a whole lot better if I hadn't been asleep at the switch. But if this works, it's a classic false breakout trade. I like this. I still like it. It's, you have a very defined lean now, which is today's session low. So if this is an important low in hogs, and it could be, then you're looking for, potentially a whole lot higher prices than above 79 that we could not get into earlier. So this trade is still young. Don't be afraid to take positions if you don't get the perfect entry at the perfect low, because you're seldom going to get that. So we'll see if this works. Obviously you don't want to see today's session low retraced. Guys, okay. I think we have an important level to watch here in breadth, and that's this level right here. We reached negative 1,400 and change. There's potential that that's the low prior to the next high, cash high. Now, clearly, I'm wrong about that. If somehow breadth takes this level out, if this level comes out, something else is going on, I'm wrong. But as long as this level holds, I would be biased as a day trader to trade this from the long side of the market. Hey guys, that could be, as I said earlier, this could be another pivot low. This was a test of this, and you can see breadth is now picking up. Now, if breadth gets above this last little peak that it formed at 1041 or so, it's a real positive, and you could see some acceleration to the upside. At this point, wouldn't want to see this pivot low taken out. Now, a small tell, let me get another chart as to what could have been going on there. And I've typed this in the chat if you look up. Now, as you guys know, I keep all 4 of the indices on a chart so that I can see what's going on a relative basis. And when the ES was down here testing this low, the NASDAQ was holding up really, really well. These two are extremely highly correlated in this bull run off. have been for a while, but especially now. So when you see this much difference between the two, it's sort of a heads up. A lot of times the NASDAQ will lead. I'm nervous if I'm short the ES and the NASDAQ isn't participating. And I'm nervous if I'm long the ES and the NASDAQ isn't participating. You know, if you're trading the ES, you really want to be paying attention to what the NQ is doing. More so, far more so than the Russell or the Dow. Guys, okay, here is price breadth chart. And I'm going to scrunch it up here again. And you can see where we came down here. This was the lowest low since December, early December. So we had an extraordinary run up from early, just not to mention just from October period. Here, I'll scrunch it up even more and show you that. So to me, this is all one giant distribution range. And you can see here, and this is a 30-minute chart, so these are 30-minute readings down here, right? And you can see every single time we've reached this level or lower, and we've only reached this lower than this level once since very early in the move off the low, and that was in December. So every time we've reached this level, within 2 or 3 days, I can't remember now which, but no longer than 3 days, you traded to a new rally high. So we'll see if that happens again. So this has been fascinating, absolutely fascinating to watch. Now let's look at this perspective. And here are all 4 of the indices. These are 60-minute charts of the ES, the NAS, the YM, and the Russell. And you know, the NASDAQ is leading the way. Now to the upside basis the bar chart. Here's your upper key reference area right in here. We'll take a look at the profile chart in just a minute, see how it lines up. This area in the ES is an area I'll be watching. You know, the NASDAQ is already approaching its equivalent level over here. It's not quite as topped off and as level as this area here, but I think you can see the NASDAQ is already into that level in here. You have this big buying tail from this morning in the NASDAQ. You have buying tails in the others as well, but it's quite pronounced in the NASDAQ. Now let's go over and take a look at, okay, here we go. So here, this is the developing session profile that's still developing. And this was posted this morning. Hold on, it's stuck, so I'm going to unstick it. Now I can move it. So we came down just to the upper cusp of this level, this key reference area that included the session low from the 16th and some volume from the 15th. We really didn't get into the volume of the 15th, but you can see we traded into here. Now, this 33, a little bit below here. What is this? About 33, yeah, 33.21 up into about 33.25 is an area to keep an eye on. And we may, you know, we may just develop in this range today for the rest of the day. But frankly, I'd like to see a test
I'd like to see one or more of the indices now. Either it's probably going to be the NASDAQ if one's going to do it. I'd love to see the NASDAQ go up and make a new high. And it'd be the only one that did so. Hey guys, you can see in here that order flow and breadth are sloping higher. We really need to get above 33.15 half in the ES. I think if we get above there, you could see some acceleration. The NASDAQ is hanging in there. It's real quiet right now. You know, this has sort of been the pattern in this market for quite a while. You know, you have this early flurry of activity, and then it just goes dead until the last half hour or so, and then it just screams higher. So far, the scream has been higher. So yeah, I don't think we've had a scream lower in quite a while. Actually, yesterday we sold off into the close, didn't we? Okay, guys, let's look at a couple things here. Starting with in front of you. Now we have the ES approaching this level. I'm going to show the 4 indices in just a second on that other chart, but you can see we're approaching this key reference area in here. Breadth is sloping higher, and the slope of breadth is increasing. Order flow is making new highs for the day. So you don't want to be fading this. That's the message. Here is the view of all 4 of the trading indices. You can see the NASDAQ is on the verge. If the NASDAQ can take out this little high right here, you know, your next level is basically this high volume node. And then actually, I think if we close up here, I don't think you'll take this out today, but it wouldn't surprise me at all to see it taken out, tested, taken out tomorrow. Obviously, the ES at the moment, because there's so much momentum, breadth is so positive, you could pause here briefly, but I wouldn't be fading this. So it looks like this pattern that has been in effect since the end of October is still in effect. And specifically, when breadth reaches this level, within 2 or 3 days, you make a higher high. So that seems to be in play here. Wait a minute, let's look at here's the profile view. We're approaching this area in here. You know, if you get above this level, you know, stranger things have happened, especially in stock index futures. But if you get above this level, then you may not run into any sort of short-term resistance until right in here, which is about 33.30. Let's see, looking across, corn is still positive. Hogs have come in some. Gold had a nice move today. It's coming in now off its high, but it had a really nice tradable move. Unfortunately, I haven't been following crude or copper. I understand from some of you guys that stuff has been moving quite nicely as well. Let's see. Golly. Yeah, here's crude. Crude has now reached this area down here that we talked about some time ago, yesterday or the day before. So this has been a good case study in auction market analysis versus market profile analysis. Auction market analysis is by far superior to a rote attempt to apply legacy market profile analysis concepts. And this is a perfect example of one of the primary mistakes market profile traders make. They'll have a profile on their chart. There'll be all this volume over here thinking, okay, this is going to be a low. But really, this wasn't important because it was trumped by the conviction to the upside. When this level came out, it made it probable this level would be reached. And this isn't hindsight. I was talking about this yesterday or the day before. So now, if you're going to get some rotation, this would be a potential candidate for some rotation to begin. But there's not a whole lot, frankly, guys, between where crude is now and all the way down to near 50. And the indices are still plowing higher. So that's it for a bit, guys. Guys, it's been fun today to follow today's auction using the profile graph. You can see we're sort of maybe accelerating towards the lower extreme of the high volume node from yesterday, which is up around 33, 30-ish, 31, 33, 30, 33, 31. This has been a fascinating day. We came right down to the upper cusp of this key reference area and then started a furious bungee jump. And here we are coming out the other side of the volume that has occurred today. Most of the rotation occurred in here. So we're sort of setting the stage now for, once again, this pattern between price and breadth to play out. And it looks to me now like we may well see either the NASDAQ and or the ES make a higher high tomorrow. Hey, guys. Okay. Interesting day. Have a great evening. Really good stuff in the chat today. Let's keep it up. And you guys get going on the community forum. Okay? I'll see you tomorrow. Have a good evening.